Good morning, everyone, and welcome to the European crossover webinar. And apologize for a little bit of delay. Got a Windows update, and it looks like I can't find any of my my little program buttons. It's kind of crazy. But anyway, so I was trying to load up the bias chart, but yeah, just trying to see what's going on over here. It even tells me I still have to, after multiple restarts, still tells me I got to restart the system again to finish more updates. So I really can't stand Windows, but I may see that for a lot of people today, running into these stupid Windows updates. But anyway, thanks for joining us here on the European crossover webinar. And we are seeing the dollar continue to weaken a bit here. We've actually come into that area, that 97.89, which was that big breakout area, on the downside to the upside, back now. So we'll find a little bit of support at that 97.89. Obviously, we've seen the euro in and of itself make a move up here to the upper 1060s. We've kind of backed up about 10 pips from there, but overall, it's a relatively quiet, with the exception of equities, which are once again at all-time highs. No, look at the S&Ps, new all-time highs again. Looks like they really got on the get-go right when Europe opened and pushed them even higher. And we're seeing that across the board. Additional new highs in the S&Ps, the Dow futures, and the NASDAQ. Even seen a nice little push up in here in cable also. We're at 29.56, which isn't very far from the big pivot. Dollar CAD continues to weaken. That 32.69 from last week, we had that right from the get-go as our bias chart resistance, and thought the market may eventually get beyond that, but that was our bias chart resistance for them to take a pause, and they were never able to get beyond that 32.69. I think they got by, I think by Wednesday they may have taken it out by 2 pips, and they've since fallen back. Dollar Mex, another epic failure. And we can see even crude ticked up above $58. Gold continues to slide back, obviously, on these new highs in equities. Take a look at the calendar today. We don't have anything on tap in Europe that I'm seeing here. But when we come into the States, we do have NAHB housing, and that's it. And then tomorrow we will have Italian industrial orders as we come on the air, and current account also for Eurozone current account. Then later on, CBI trends. Orders for UK data, as well as New Zealand dairy prices, building permits, housing starts, and in the States, and then manufacturing sales for Canada. But that is, once again, that's going to be for tomorrow. For today, as I mentioned, nothing I'm seeing here in Europe offhand. And at this morning, 10 a.m., we'll have NAHB housing market. So with that, we'll just go on and move into, even the news is pretty slight too, so we'll get into that. So the euro sees a sigh of relief as the dollar weakens on U.S.-China trade deal hopes. The euro enjoyed a small respite on Monday, jumping to an 11-day high versus the dollar on expectations that Washington and Beijing can soon sign off on a deal to end a trade war that has been a drag on global economic growth. Faint optimism for a breakthrough was supported by a report on Sunday from Chinese state news wire Xinhua, which said the two sides had constructive talks over the weekend. The export-oriented European economy has suffered from the 16-month-long trade dispute between the world's two largest economies. The tariff war has taken a toll on the world's manufacturing. Investors injected $3 billion of inflows into European equities over the past 2 weeks, ending a record run of 85 weeks of persistent outflows. The market participants remained optimistic that a partial U.S.-China trade deal will be signed soon and have welcomed tentative signs of economic improvement outside the U.S., especially in the Eurozone, both of which were eroding the relative appeal of the U.S. dollar, said Lee Hardeman. The euro was up 1/10% at 10.68, its high since November the 7th, and the index, which tracks the greenback against 6 major currencies, was down 0.1% at 97.90, respectively. The offshore Chinese yuan, however, remained below 7 per dollar, last falling to 7.0142. The Chinese yuan, dollar yuan suggests 7 suggests the market is not convinced a solution is near, said Marshall Gittler, chief strategist at ForexAnalytix. The lavalier mover, however, was the pound, creeping up 0.3% against the dollar at 29.45. We're even above that now. Sterling was boosted by expectations that the Conservative Party could win a majority in December 12th election, as well as British Prime Minister Boris Johnson saying that all Tory candidates in the election have pledged to back his Brexit deal. This could open the door as getting the Brexit deal agreement passed through the Parliament. Johnson's Conservatives have a 14-point lead over the opposition Labour Party, a poll published by Good Morning Britain showed on Monday. Anyone firmly believing in a Tory victory can expect the further potential in sterling, said Commerzbank analysts in a note to clients, though they add that the FX market is still quite skeptical towards a Tory win. With that, we're going to move into the analysis. And let's go move into the euro. So it said the euro closed at its best levels of the week after refusing to go close sub 110. Immediate move is to test 111 with a daily close above 1080 needed to negate the short-term bearishness. Support comes in at 1018. So they're looking for a move to the immediate test is going to be to 111, but the resistance is going to come in at 1080. If we can get a close above 1080, that's going to negate this short-term bearishness. Doesn't turn it bullish in any respect whatsoever, but it does negate that short-term bearishness. Try to move this out of the way. So still remains bearish, but a daily close of 1080 would negate that bearishness. So that's going to be the resistance. Support in the meantime is going to come in at 1018. And let's go and move into the candle. Cable closed at its best levels in 9 sessions, albeit in a relatively tight range during the period. Immediate resistance is 29.40 with the major pivot at 29.80. Immediate support is 28.40 with a daily close below 27.94, allowing for a challenge of 26.67. Well, right now we're even above the 29.40. So we have to go with the pivot, which is the 29.80. It'd be huge if we close above 29.80. And so it looks like it wants to make that push. I mean, at this moment, I mean, it almost seems in the sense not that we're going to all get all giddy about this, and the conservatives look like they're in a position to win, but it's just a matter of we may just have to push, at least if nothing else, probably push the stops a little bit here. So resistance is going to be actually right now the pivot, which is 29.80, and we all know about the importance of this pivot, which goes back. Look at this. That pivot is very, very important. And why we call it the pivot, why we have it in that dark maroon as a pivot, or listed as a pivot, I should say. And support, considering we've already moved up there. It's going to be right there for now, considering where we've moved up to. So it's going to be 28. It's going to be 28.42. But I would think they'd want to go in and challenge at least the stops above that pivot. Let's go move into the Aussie dollar. So since the Aussie spent the week drifting lower, overall dollar selling allowed some minor short covering on Friday. The pair is dead money. Range is 67.72 on the downside, with the upper side at 68.56. So that's it. That's the way I see it right now. It's just plain dead money. The only reason it even allowed to pick up something is because if you look at the cash dollar index, we slid on Friday. Not a whole lot, but it allowed some short cover. I mean, this benefited really from the euro starting to move higher, the cable moving higher a little bit on Friday. I mean, and dollar CAD lost against the dollar. I mean, well, the dollar, I'm saying in the dollar or the dollar CAD, which correct, did go and pull back, but I'm saying it's just benefiting from an overall dollar weakness that was pervasive on Friday. Has nothing to do with the Aussie coming back. So that's what I'm saying is it's just some short covering based on that overall dollar selling. So to me, as far as I'm concerned, I mean, you look at it technically, it's just dead money. I mean, I think it potentially get lower, but I mean, it's just, I think that the reason I was pointing that out is because I believe that at the beginning of the week, we would start to slide lower, which we have, and we've already tested this 97.89. I think the potential is for the dollar to still move a little bit lower, not completely fall apart, but move a little bit lower. So it'll benefit from that. Although I think it's dead money because I don't see it turn around and take it off. Like the euro has some potential to move higher. Certainly the cable, but as I mentioned, dead money here. So we're going to put those upper bounds. So as I mentioned, we're just going to go with that upper bound, and it's which is going to be 67.72 on the downside, 68.56 on the upside. The Kiwi remains mired in a 100 pip trading range. The pair needs a daily close above 64.36 to generate some buying interest. A break would allow for a challenge of 65.25. Downside support is 63.26. So you can see here, just not a whole lot of happening. We've just been stuck in this tight trading range. We're not doing a whole lot of anything. We'll go with that upper level, which is key, 64.36. And downside support is going to be 63.26. Here for the dollar CAD, the prior week's bias chart resistance of 32.69 kept the pair in check. Thursday's Gravestone Doji allows for a backslide to 31.84. Immediate resistance is going to be 32.50. So this pretty much clears the bell right here on this one. And I think that this pair can weaken even further. I don't think it's going to get to 31.84 necessarily today. But we'll put support today at 31.96. And let's go move into the dollar peso. So the dollar peso sustained a failure of the breakout of the prior pivot, which was 1923.6. You heard me talk about that till the cows come home, that 1923.6. Support comes in at 1908 with a potential move to 1892. Resistance is 1927 with a daily close above 1936 to negate the current bearish picture. So we'll pull this back here. And there's that huge 1923.6 that was key on the upside. On the downside, we got above it and we turned around and failed. And here we are pressing against it again. If they compress a little bit above it, resistance would nonetheless still come in at 1927, which will be our bias chart resistance. Support for the week, I mean, potentially we can go back to 1908, but right now we have already come off quite a bit. So support on a very short-term basis is going to be 1912 for today. On to the dollar yen. The dollar yen has found some minor short covering after coming within 4 pips of the 78% retracement on Thursday. The pair continues to ignore rising equity prices. Resistance comes in at 109. The pair will need a daily close above the pivot of 927 to spark further upside to 977. Support is 828. So you can see here we're pressing up against here. New highs again in equities. And we did, like I said, come in the 78% on Thursday was 822. I was sharing chat room at the time because I was saying, I was looking at the bonds. I was actually trying to sell the bonds myself. I was working on a limit at the time on the December bonds was at 31. Go back to this, bear with me. I didn't even see it later on the day. It actually made it up to 58.30. I still can't believe it because I could have saw it. No, for my thing it says no. I guess it did make it at 58.30. But I probably got a little bit chinchy on that because. But here's the point, though. That's what I'm saying is the market was trading and the DC bonds were trading at 58.07, and we broke higher and we kept moving higher. And I said, "Wow, this is really a great area," and they had huge amount of volume sitting there to take the other side layoff at 159 even, and I was trying to sell it. Actually, I was trying to sell, I think, at that price at the time, and I considered 58.31. I think at the time, I think I saw the market stop at 28, but it looks like it did make it up to, I guess it made it to 30. I didn't quite see that. Maybe it was one tick or something. But anyway, that being said, I was mentioning that, because that the dollar yen trades close for the bonds. That was coming in right when the dollar yen was there. Actually, I probably should have even bought it my own self, but I was looking more. My interest was more towards the bonds. But that was a great area. That was an exceptional area. I mean, you couldn't have asked for any more with it being at the 78%. Per reason it was driven that low because the bonds had rallied that high and was seeing some good volume at that level. And we've since come off. Right now, these bonds are 58.01 right now. But can you imagine that on Thursday they were up to 58.28. I was thinking they might make it up to 59. And I didn't see him hit 58.30. I saw 58.28, but I guess it might have grabbed one tick or something. I don't know. But anyway, that being said, nonetheless, the resistance is going to come in at 109 even. Put it at support at 828, but that could be a little bit of a stretch at this point, considering what the dollar yen's at right now. So we shall go. Well, 840, yes. The only problem is that we're even almost at 109. 840 would be quite the drop. And that would be a bit rich right there. It's going to be 859. as where we are today. So it'll be 859. And with that, let's go moving to the cash dollar index. So the cash dollar index was unable to get past the week's minor resistance level, which was 98.41. Remember, if we been able to get a daily close above 98.65, that would put the bulls on full-on control, and boom, open the door for the dollar to take another leg higher. But we couldn't even get past that resistance, at least for the beginning of the week, which was 98.41, considered it minor. But anyway, that being said, a daily close above 98.65 would have provided a new up leg. Support is the weekly level of 97.89, followed by 97.60. A daily close below 97.89 opens a challenge to 97.20. So we're pressing this for right now. We're right there on support. I think that we can slip even lower, but obviously this 97.89 is key. I'm not so sure it's going to get to 97.60 today, although maybe we'll start to see a bit of a divergence here. So let's go on, and we're going to go with that 97.60 in case maybe we do start to see, maybe the euro starts to put on some juice and move to the other side of the dollar index, starts its leg lower. Because I'm surprised that even though the news out of that Xinhua Chinese news agency saying talks were constructive, the dollar still continue to fade. And maybe, I don't think we'll get all the way to 60, but maybe we can start to continue to drift a little bit lower. But we'll go with the 97.60 because we said if we got past that. Now, once again, a daily close below 97.89 opens the door for a move to 97.20. On the upside, well, it's going to be that mini resistance, not mini, it was resistance we had prior to last week, which is going to be 98.11. That'll be our bias chart resistance. With that, we'll move into the cross rates. Okay. There we go. QEN has been trapped in a 100 pip trading range for 3 weeks. The pair needs a daily close above 70.48 to spark the upside, which would then allow a challenge to 71.77, which would be the 78% of 66.30 to 73.25. A daily close below 69 would allow a test of 67.93. So as I mentioned, we need a daily close above 70.48 to get us going on a very, very short-term basis. You could look right there. Now we're going to put it at 70.48 because all we're doing, I mean, we're stuck in this tight range. You can press a little bit higher, and you really haven't hit any real key resistance until you get to that 70.48. So it's going to be 70.48. And as I mentioned, daily close above 70.48 allows this market to move up to 71.77. So it is going to be 70.48. And support is just going to be this lower band right there for right now. It's going to be 68.89. Let's go move into the euro yen. The euro yen came to life with some short coverage on Friday, tested broken support level at 20.31. A daily close above 20.31 will allow the pair to re-challenge the highs of 21.35 with initial resistance at 20.88. And let's see here. We're just about there too, but that's going to be our resistance there, which is going to be 20.88. And support is 19.48. Let's see if we can't get a little bit closer here. Yeah, right there. So we got above here. 1970. That's going to be support, 1970. Let's go move into euro odd. So the euro found further buying after reclaiming the 60.95. The pairs moved back into the middle of the range, which is 61 even to 63.50. Short term, there is a bullish bent, but overall the pair is neutral. Immediate resistance is going to be 62.86, where bulls will layer some exposure. Support is 60.95 with a daily close below that, allowing for a re-challenge of 59.92. So resistance we're going to put here is going to be for 62.86. And as far as support, we're trading pretty tight, but it's pretty clear right there. It's going to be right there, 61.70. Call it 61.76. And onto the Euro Kiwi. The Euro Kiwi has broken lower with bears in charge. Thursday, the pair found some short covering. The pair would need a daily close above 74 even to negate the bears' hold. Support on the downside is 71.31 followed by 70.38. So for right now, resistance is going to come in right there at this bottom area here, right there. You see these touches on the close, on the bodies? There's your resistance, which is going to come in right there at 73.42. They would need a daily close above 74 to break the bears' hold, at least for now. And that's the same resistance we had on Friday, and then support on the downside. If we were to break a little bit lower, here's going to come in right there for immediate support, which is going to be 71. We'll call it just 71.64. And moving into the dollar, Aussie yen. Thursday, Aussie yen. Thursday, the pair broke below 74 on the close, only to recover the level on Friday. Time will tell if this results in a false break. The bears will have stops on a daily close at 74.86, and that's for them to go in and cover and get the heck out of Dodge. Downside target for bears is going to be 72.96. So as you can see there on Thursday, we actually broke this level here. You can see the significance right here, 70.62, 74.62 right there. So we broke below this, 74.02, and looked like we're heading down lower. And then we turn around and recover back and recover that level on Friday. So resistance is going to come in right now. Immediate resistance. We'll call it that for 74.69. And support, well, it comes right back here. After we turn it around, it's going to be right there. That anyone, let's say someone is bullish, that's your risk level right there. And should go and initiate, you would actually see some stops being hit right there if we did get lower. 73.57. And let's go move into the guppy. The guppy remains stuck at 140 within a 75 pip range on either side. The upside resistance is going to be 40.78, which now we're above it, obviously with the strength of the sterling this morning. With a close above allowing for a move to 41.82. Well, that's going to be the resistance, and that's this level that we're looking up here, right there. Let's pull this back. You see right there? So obviously, and we talked about, let's see, let's go with this here. We talked about, with cable in itself and saying, hey, look, it's not that far from the 2980 pivot. And I think they're just going to be able to, I don't know if they're going to launch above there, but I think they should be able to get above there just to broach those stops. And that's what I see here with the guppy too, is, and certainly I think that the yen would remain a little bit weak, at least initially for today, while they may try and push equities even higher. We don't have any significant news, so they could push equities higher, which would open the door for us to challenge this 4182. That is going to be our resistance, and it's going to be a key level too. But 4182 for the guppy. Good start to the week for guppy. Support in light of that. Let's take a look here. You can see all the little touches here. We'll take it just a dip lower. You see this high dip from there? And then that's just a little bit below the close on Friday. So we're going to go with 40.28. 40.28. And let's go move into Sterling on. So starting out after a solid week, took a pause on Friday just above 90, 190. Bulls need a daily close above 90.58 to generate a new leg up to 94.07. So you can see here, that's today's resistance, 90.58. And we may be able to get past that. But if we can get a daily close above 90.48, above 90.58, it really opens the door for a move to 94.07. So that's be quite a move, and obviously Aussie continues to remain weak, but right now it's going to be 90.58 for our resistance. And resistance, support, you can see right there. It's going to be 88.48. Call it 88.50. So there we go. We've got the analysis in. We'll go and take a look at some of the other markets. Obviously, with the strength in equities, new highs again. This crude oil is broaching this 58. But, it's just going with the move. The funny thing was, not funny, but was early on Friday morning, it was ignoring the equities, early Friday morning. Then it turned around and tell you what, as I mentioned, I didn't come in and sell this thing, and I'm glad. But, doubt from the prior Friday is that, like they say, the old adage about not selling crude on a Friday. And but the thing was is that it wasn't following, and there was nothing technically, speaking to go and say, oh, this market's going to rip. And it just ripped. And that's the only problem I don't like about crude right now is that it'll just run over you. I'm saying I'd like to get back in that market when we see these nice two-week swings. But right now, for the last few days, you can see right here, you see Now this one a little bit, we can say the market was oversold, but even then, like I said, there's no forgiving here. It will just run you over. The same thing here. And you can see here, we failed the other day. It looked like, okay, we're going to break higher. You see here, and then we're, okay, now we sell off pretty good. And then comes Friday, they, a day later, they run you over. And that part I don't like about it. Gold is obviously slipping here because we did hit that 38%, remember, at the 1475. We already pared back, but we're slipping further because obviously the new run up here and new highs in equities. We're seeing new all-time highs again as we came in this morning in Europe. Obviously on that news from Xinhua agency stating talks were constructive. They think a deal can be done. That being said, I mean, the dollar yen is higher. We have resistance at 109. But once again, if you look where the U.S. equity markets are, you would think the dollar yen would be really closer to 111. And once again, I've been mentioning that for the last couple weeks almost, like the old 90s songs, things that make you go, So I saw Blake's video this weekend, and once again, if equities were to turn over, boy, this dollar yen could really sink like one big, I don't know, I mean, just really go to the bottom of the ocean. If equities were to turn, because like I said, we can't even get above the pivot 927, much less moves above closer towards 111. So if equities were to falter, you'd really see a big move in dollar yen. But that's all that we have for today. Thanks for joining us here on the European Crossover webinar, and we'll catch you in the chat room.